Are you ready?
Ready.
All right, let's go. Kevin here, Top 1 Financial Advisor and best-selling author. We are here to talk about the stock market. We need to talk about streaming companies and streaming companies that are connected to specific stocks because there is a large red flag that I don't think enough people are paying attention to, and I would venture to say that the streaming industry is taking a long walk off a short cliff. Now, I feel like I've said that in the last 3 videos. We'll see how long keep the streak alive. However, that is a big issue. So I'm going to walk out this case. I also want to say this, like one of the things that I think makes me a little bit special here on YouTube and all these other places is, one, I get to have fun and explain things in a way that most people can understand. I think that's a gift, and it's primarily given to me from my background in education before going on to Wall Street. The second part is I like to take a business angle to things. I don't just put out lists of stocks and just say, hey, buy it at this price and do all that kind of stuff. It's not really me. What I do, however, is say, here's what's going on in the economy, here's what the Fed is doing, and here's why these things help this business to succeed, which should impact the stock price. That's how I roll. That's where I've been trained. I think that is a case that makes sense for most people. Now, the other thing, too, is when I'm looking at the streaming market, I'm seeing a huge red flag where the math ain't math, and I think you would absolutely agree. And you'll notice that some things are changing in the streaming space, and you'll see that from the return perspective, that things haven't gone well. So I want to walk through the case, okay? So there are 120 million households in the United States. 80 million are streamable. Not every house is able to be streamed. Maybe they don't have TVs. I don't know what the deal is, but not every house in the US is streamable. So of 120 million, 80 million are streamable. However, these streaming companies, and I've just pulled up 7 here, they are spending $140 billion a year. Now sit there and do the math real quick. I have 80 million streamable households. That means if I got into 100% of every household in the US that can be streamed, that's only 80 million, but I'm spending $140 billion. That means for me to be profitable as an industry, I need every one person to spend at least $1,800 if we round up. So that's what, $1,750 if I divide the 140 billion by 80 million. That's not going to work because you are not spending $1,800 on Netflix. I don't care if you had Netflix and Disney Plus and Hulu and all of them combined, Amazon included, you're not spending $1,800 a year on streaming. However, these companies are, and somebody is bound to lose money. But also this math where you're spending so much on content and people are paying very little in comparison, the math is not mathing, which is one of the reasons why Netflix is raising prices. It's also one of the reasons why Netflix is moving into merchandise, which is something that I've been saying for a while. I've also said, I just want to say this again, I think Netflix should go ahead and buy Roku. I'm just going to throw that out there. I think they should. I think it would be the best thing for them to do. But in either case, you see the business case for what I'm saying here. You cannot spend $1,800 a year on creating the content and only get $10 a month back. That's not going to add up. That's going to be very problematic for you. Now, for Netflix specifically, it's not a Netflix video, but for Netflix, they used to be able to just pull an NBC show like Seinfeld and pull a show from wherever. They have to make a whole bunch of original stuff. But now the competition is out there and these other companies are spending a lot more. They are forced into it because now I have to have more original stuff. I'm a Marvel guy. I see the Spider-Man back there. Yeah, I used to be able to watch all my Marvel stuff on Netflix. Now I don't, which means that Netflix now has to spend money to provide whatever types of content that is now missing. That is a problem. Again, you're spending $1,800 a person and you're only getting $10 a month, $11 a month, whatever it's going to be in return. The math, again, is not mathing. So here's what I want to show you. So I'll put this on the screen here. Or actually, before I put that on the screen, I want to walk through all these companies real quick. So I pulled 7. So Netflix is year to date. Netflix is down 71%. Their primary driver is just streaming. You'll notice here that as I'm going through the rest of these, the companies that have other avenues of revenue and streaming just one of the things they do, they tend to do a bit better. But streaming only is not going to cut it anymore. So Netflix down 71%. I've got Roku down 62%. Now remember, Roku also makes the TVs, but they do have a streaming service. It's not, again, the bulk of their revenue. They basically make a lot of their revenue from the TV itself and the apps that are on the TV, but it is something. They're also doing an interesting advertising deal with Walmart. We'll talk about that at a later date. But Roku, down 62%. Fubo, I don't use Fubo. I don't think I've ever seen it in action, but it is down more than 80%. Then I move up to Disney and Amazon and Apple. Now notice that. Now I'll pull it down real quick. Now notice that Disney, Amazon, and Apple, the other companies that are way more diversified, are doing a lot better. Where we have, Apple at negative 18%, which is beating the market as so far today, because the market is down for the year about 20%. So Apple is doing slightly better than the overall market. Not great, but you beat the S&P 500, you beat the S&P 500. Then you go to Amazon being down 32%, and then you go to Disney being down 39%. So I think we have a key to this story. If you are going to be an investor in the streaming business, you have got to have another stream of income other than streaming only. And this is one thing that has helped a company like Amazon and Apple to a degree be so successful, because they have Amazon Prime and they've got that product as well as like the cloud and all kind of stuff. But primarily they have a main product that you can build things off of. Like Apple TV I don't know many people who really watch Apple TV out of Ted Lasso, and they're trying to do a deal with the NFL, and I think they did a deal with soccer. So we'll see. Apple will become a bigger player. But whether Apple TV exists or not, they're getting your money primarily from the App Store and from the phone and the headphones and stuff like that. And it's just another thing that they have. So when Netflix is burning out, right, and losing money and trying to keep up, Apple could just sit back and put out whatever content they want, and really have more money, because if I can sell more phones, the streaming service is going to pay for itself, right? Same thing for Disney. If I can get more people to the theme parks and sell more toys and make more movies, I almost forgot about that because Thor just came out. I can do all that, and that'll pay for Disney Plus to a degree. And everything just keeps churning on its own, where other things are paying for the streaming thing. And that is forcing other companies like Netflix and Fubo and maybe Roku to a degree to really run themselves into the ground until you become a bigger player. This is, an unfortunate strategy of Amazon. We've been doing this for forever. Is really force you as an opposite business owner to really spin your wheels until you can't spin them anymore. And that is something that I think not enough people are talking about. Like, yes, a bunch of tech companies are down this year. And I think that's just a blanket that we all say, yeah, Netflix is down this year, and so is Nvidia, and so is whatever company. They're all terrible this year because of interest rates and inflation, all that kind of stuff. And all that stuff is true. But when that season is over, which hopefully sooner than later, but whenever that is over, there's still going to be an issue for Netflix where the amount of money you are spending on content, and Fubo and others, the amount of money you're spending on content does not equal the amount of revenue you're getting in, and you can only raise prices but so much until people react. Now the other part of this is, well, what if I go international? And obviously many of these companies are already international, so that's number one, right? So I mentioned 80 million households here in the US, but worldwide, yes, there are plenty more households. However, not every one of those regions are going to be able to pay a higher price. Also, as you go to these different regions, you also need different regionalized content, which is going to cost you more. Not everybody wants to watch, I don't know, Happy Days. That's just not going to float in certain areas of the world. It's just not interesting to them. So you're going to have to go, the more you expand, the more you're going to have to spend in some capacity. And also, and this has happened with Disney Plus, I think particularly in India, if I'm not mistaken, where, a $12 subscription is expensive there, and they have to lower their price, which means that margin, the amount that, they're making something for and they're selling it for, is a lot thinner. So you got to be real careful from the business side of streaming services, and that is going to be an issue. There is a reason why there aren't that many music streaming platforms because the math isn't math. You got Spotify, Apple Music, which they are not, at least to my estimation, they're not really focusing that much on. And then you've got what I forget the one Jay-Z owned and then sold to Square. What was the name of that one? Tidal. So that's really, you got those three, and I guess Pandora if you want to throw that out there. But that's really it. And that's why they've kind of moved more into podcasts, because podcasts are a little bit better and a little bit more exclusive. But again, how much are you paying for a podcast on a monthly basis, on a subscription? So you got to pay attention to the business. That's the entire point here. I think streaming businesses are really going to be in a lot of pain and a lot of trouble because that competition is only going to continue. Apple TV is coming up, if it's not there already, according to some. This is not to say that any of these companies are going bankrupt. I'm not into that business, but I am here to say that that when the math isn't right, it's only a matter of time before there is some major moving and shaking. And you've already seen it, where you've seen, though a part of this was because of Russia and we're coming out of the pandemic, but you've already seen some people leave Netflix. You've seen Disney Plus skyrocket to a certain point, and it's been very difficult for them to continue to grow. Do I think that Disney will be fine in time? Probably so, because Disney has other levers to pull if they need to. Right, you're looking at Netflix that now has to consider doing ads because of this particular problem. They cannot extract $1,800 a month from you every year. They can't do it. So they've got to find other revenue streams, and those who find those ways and those that find those ways and are able to be creative are going to be the ones that are going to be successful. And you, as an investor, have to be able to pick and choose which one of those companies if you're even in this space. So last thing I'm going to leave you with is this. Roku announced that they're going to do a deal with Walmart where you're going to be able to use your TV to shop online. It's stuff like that you have to do to become profitable and have that extra revenue stream in case your streaming service isn't really making you that much money. Okay, think about that. So Roku is exploring that with Walmart. Basically, you'll watch something on TV and you can click on the TV, buy something, it'll come from Walmart in like 2 days or whatever it's going to be. So it's stuff like that is interesting. Does that make me want to buy Roku? I mean, I've always liked Roku. I think I've talked about that before from just the way the company is organized, but the stock is not where I need it to be before it checks off my list. I think I can do T-Mobile and be fine until Roku gets its stuff together. But the point is the point. You got to be able to break down the business and be able to articulate, not to me, you can, because I like to listen to your thoughts and comments, but you have to be able to say, this is happening and this is why it is supposed to be a good investment. This is why the company is supposed to be good. I've talked about the same thing with GameStop, why I think it is not going to be good. Those who cannot do that and cannot do that effectively usually fall for meme stocks. They usually buy investments and then they don't end up well. And I want you to do better with that. So it's not difficult to do, but you have to be able to say, look, here's what's going on in the market, in the economy. Here's how this business fits with that. Same way I can say that I like Hershey and why Hershey makes a lot of sense. I did an entire video and you're like, it does make sense. Whether you want to buy it or not, it's totally up to you. But the case is the case, right? Greater traffic in stores, being able to raise prices, all that stuff. You can do that. Makes sense. So you gotta make sure that everything that you invest in has a good business case behind it. Because at the end of the day, it's not just the number of the share price that you're looking at. It's about what the business does behind it. All right, so before I let y'all go today, make sure that you sign up for the members only. The link will be here. It'll be right below this video. It'll probably also be in the comments as well. What I wanted to do this week, and y'all let me know, members be on these videos. Let me know what y'all think. I'm compiling a list of all the tools, all the websites that I use. Not just general websites like CNBC, which I do use that, but like here's where I get all the nitty gritty information and how that has helped me to rebalance my portfolio, find out what stocks make sense. We did one on insider buying. I think that one was received pretty well. Let me know if you want more tools and resources in terms of the website. Let me know. If it's gonna be helpful for you, I will do it. Y'all know this channel is y'all's. What you ask, I make videos from, and I'm here to listen. So let me know what works for y'all. All right, I will see you in the members only group, and I'll talk to y'all tomorrow.